South African consumers were dealt yet another blow this week when the Reserve Bank Monetary Policy Committee unanimously decided to increase interest rates by a further 50 basis points. The committee cited risk to the inflation outlook as the reason for its decision. To discuss this further, we're joined by economist Professor Raymond Parsons. Prof, a very good afternoon to you. And as I've just mentioned in my intro, it was rather a huge blow to consumers who have various big ticket debts like home loans and vehicle asset finance, but the Reserve Bank governor indicating that in the long run, consumers will be grateful for the hawkish stance that has been taken by the Reserve Bank. What were your initial thoughts on this decision? Were you expecting it?
Well, good afternoon to you. I think in order to understand what is being called a big blow both to consumers and business as a result of the interest rate decision, I think we do need to understand where the Reserve Bank is coming from with its decision to put interest rates up by as much as 50 basis points instead of the 25 basis points, which I think that most economists were expecting. I think firstly is, of course, they feel that inflation is still well above the Reserve Bank's 3 to 6% target range. Then the ESCOM load shedding is clearly imposing huge costs on the economy, both in terms of inflation and the loss of growth. And then the recent sharp fall in the rand has got potentially inflation effect. So I think the point of departure for the bank has been that for them, the inflation expectations remain unanchored in South Africa, and therefore they needed to offer strong medicine to both consumers and business. I think we need to understand that even if there may be some comment or criticism as to what the decision ought to have been.
Prof, are there any remedial structural reforms that could be implemented by other institutions of government to mitigate against the dire economic situation that we face in South Africa?
Well, I think that's a very important point because as the governor himself pointed out, and I think other commentators have done, when you ask, are these interest rate hardships really necessary for South Africa at this point, then you've got to point to the other issues that are clearly risk factors in the economy, which are driving the cost inflation which we are experiencing and dampening our growth prospects. So whether we talk about our failure to keep the lights on or offer a sustainable solution, both in the short and the long term, which inspires confidence that we will keep the lights on for everyone. Secondly, the issue of the administrative prices to which the Reserve Bank has referred. We talk about the electricity tariffs and the municipal tariffs, which ought to be brought within the target range of the bank. And then the other issue is, of course, those risks and those perceptions and optics about South Africa, which have pushed the rand down recently. So those are not issues directly that the Reserve Bank can deal with. But the question has to be posed, how much further can we go by simply expecting the Reserve Bank to put up interest rates, and whether it was necessary to go to 50 basis points, could we have got away with that 25 basis points, which would have been less of a shock? Because we are at a tipping point as to whether, as the governor himself hinted, we may or may not experience a technical recession in the next few months.
And that's a very important point, Prof, because obviously what they do is they also increase the cost of borrowing. So you'll find that small, medium businesses who rely on financing from financial institutions like banks will now find it costlier to approach them and, of course, adhere to their obligations, their debt obligations. In the immediate term, Prof, what does it do to small and medium businesses who rely on financing from financial institutions with the higher cost of borrowing now?
Well, I think it's going to be tough for them, quite clearly, and they will have to take steps to be able to deal with it, as will, of course, consumers, to be less dependent upon credit, which is now going to cost more. Because remember, that small and medium business and all business are already suffering from a number of other shocks, such as the ESCOM load shedding, all the costs that are involved with that, to try and keep the lights on through the generators. Those are important cost factors. I think what's important, though, is that we need not to underestimate, and I think it's important that the Reserve Bank also does not underestimate, that they've already been increasing interest rates over 18 months. We're making a big fuss about the latest decision, but there's a cumulative impact. Interest rates have been going up steadily since November of 2021. So you've now reached a tipping point. And secondly, that the growth forecasts for our economy this year by the Reserve Bank itself and by others are already at 0.2% or even 0.3%. So you've got to say to yourself, well, you've got to be very careful how much further you're going to go with these high interest rates, because the longer they are high, the more likely we are likely to tip into a technical recession, which is, just to explain it, 2 consecutive quarters of negative economic growth. Our growth figures for the second quarter will come out on the 6th of June, quite shortly, and then we'll know whether we're at a tipping point of a technical recession. So I think we've got to be very careful. Both the Reserve Bank and all other commentators must understand we don't want to go from the frying pan into the fire in our efforts to deal with inflation, which is a real problem, but we've got to deal with it in a way that doesn't put the whole burden on interest rates. But now, other, as you rightly indicate, other factors dealing with load shedding, with our geopolitical stance, with our other administrative prices, those issues have now gone to come to the party if you want to relieve the burden of what high interest rates may do to the South African economy.
Thank you very much for those insights. A very gloomy picture, Prof, but there's always some light at the end of the tunnel, and hopefully that's the situation for us here in South Africa. That is economist Professor Raymond Parsons joining us to reflect on that 50 basis points that was slapped again on the consumer.